Hey everybody, hope you're having a great start to the week. So I'm not going to walk through my personal dividends or anything like that today, but rather I would show you the way that you can calculate how much capital you need to make the income that you want, whether it's daily, monthly, yearly income. And basically the way I'm going to do this is I set up a real simple table, and we'll kind of walk through how I set it up so that way you can really see what I'm doing and you can calculate this on your own. So hopefully I go through this rather slow and you guys can follow along. So if you're new to dividend investing, you can do this table on your own and kind of mess around with what your risk tolerance is and where you think your portfolio percentages are, so that way you can come up with your own value, your target goal number, so that way you can figure out what you're aiming towards on a day-to-day basis. So personally, when I think about this stuff, I like to think about what I want in terms of income. Is it $100 a day, $200 a day? And so what if you're just looking for, say, like $5 a day, or like almost $2,000 a year in income, right? And your portfolio yield, let's just type up here, portfolio yield, is 1% or 2% or all the way up to 20%, right? Just to demonstrate what potential you might have, right? And what this basically we're going to do is create basically a table, walk through it, so that we can figure out what sort of capital you need, right? So if you think about it, if you want your income to be $1,800 a year or $5 a day, you need to invest $182,000 if you essentially are going to get a 1% return on your yield. So you get 1% off of $182,000. It's going to get you $1,800 a year, and monthly or daily, this is the value that you would get. Super simple to create this. You basically would just have this cell equal it to what your yearly income would be, and basically divide it by whatever your percentage yield is. These percentage yields are annual percentage yields, so if you have a company that yields 2 or 4%, that's basically what you'd be looking at in these columns here. So I just did this so that you can just click and drag this over here, and you can see with relative ease how quickly, depending on what kind of percentage you have for your portfolio yield, how much capital you need, right? So if your capital or your portfolio yields anywhere between 4 to 6%, you need $45,000 to $30,000 to be able to get this $1,800 a year. So let's think about maybe you want something closer to like $100 a day, right? So you want $100 a day, it's $36,000, $37,000 a year, and depending on what your portfolio yields, it could be anywhere between $182,000 or $3.6 million. And this is kind of, it's a wide range, right? But the reason why I'm showing you the wide range is you can invest in things that return a 20% rate of return. It's probably not something in the stock market. And this is also just talking about dividends and like free cash flow. It's not talking about total returns, like when you hear about what the stock market says, like, oh, it returned 7-8% this year. That's not what this is. This is talking about yield. So dividend yield or return on cash investments and stuff like that, whether it's gas stations or vending machines or what have you. So it really also depends on the security of the investment. And just because something yields 1% doesn't mean it's more secure than something like 20%, but it also means that it's probably less likely to cut the dividend if it's only yielding 1%. If you have a stock in the stock market that's yielding 20%, it's probably not going to be there very long, or it's a crazy investment. I've seen things between the 10 to 15% range, and generally speaking, the price of the stock either is tanking and the dividend eventually gets cut, in the case of like Cjo Partners or something like that, or the company just cuts the dividend, right? Just completely because it was unsustainable. So basically what I'm trying to show is, depending on what your risk for tolerance is, sometimes people try to get the 3% range, 4% range, because they think companies in the 3 to 4% range are a little bit more comfortable, and there might be a sweet spot with respect to their risk portfolio, what have you. And then you have companies in the 1 to 2% range that are like high growth companies, right? they're growing the dividend every year, but the company, the share price is skyrocketing so fast that the yield is only 1 to 2%. So 4 to 6% might be yield or be reserved for companies like energy stocks or utility stocks, which are, generally speaking, more mature assets, more mature equities, been long and around longer, so they pay more of their free cash flow out to investors rather than trying to continue to invest in the business and grow it. Whereas you have companies like Google or Apple where their rate of return is so high that they'd rather, instead of paying out in dividends where they're not being able to return in the business, they'd actually invested in the business and be able to get those 20-40% rate of returns. So why would they pay out you 1 to 2% when they can reinvest that money into the business and get 20-30% returns, if that makes sense? So let me walk you through what I personally am looking for. So at the moment, I'm kind of looking towards this $1,000 a month average monthly income. So that's somewhere around along the lines of, like, let's say $33 a month. And $33 a day, I'm sorry. About $1,000 a month, or $12,000 a year. This is where I want to be by the end of next year. So my portfolio yields around 4 to 5%. So in this simplicity, we'll say 4%. At the moment, I have about $220,000 in my actual dividend yielding portfolio. I have part of it in, or actually it's probably closer to $200,000. $200,000 in my dividend yielding portion of my portfolio. The other part of it is 401k, and I can't technically see the dividends that come from that. What that's basically saying is, for me to be able to get this $1,000 a month that I want, I'm going to have to invest another $100,000 between now and the start of 2020 to guarantee to get this $1,000 a month. Now, luckily for me, it's probably closer around the lines of 250 because I'm closer to, I think my average yield at the moment is about 4.7%. So it's probably in the 260 range if you kind of take this in between this 4 to 6% here. You can see if you interpolate between these two, it's probably around 260,000 that I'll need to be able to get to this $1,000 a month. But in the longer term, something that I'm looking forward to and looking towards is getting something that's closer to like $100 a day, right? So that's basically going from 2020 next year, $1,000 a month to $100 a day. So almost 3 times the amount that I'll be making next year. I still haven't really determined what year I want that to be. Is that 5 years from now? Is that 10 years? It's probably along the lines of somewhere within the next 5 years, but I still have to do the calculations and see how fast the ball will be rolling to do that. But in the longer term, something that I think is relatively achievable, but before I get into that, in order to get this, I'm going to need about $700,000 or so, anywhere between $600,000 to $900,000 to be able to achieve this, because I anticipate that I'm probably going to stay between the 4 to 6% range, maybe closer to the 4% range, because at the moment there's some investments that I've made that are a little bit riskier, and I'd rather get that more safe investment at about 4% rather than inching it up towards the 6%. So basically at this point, between now and the next 5 years, I'm going to have to triple or so the size of the portfolio to be able to get anywhere close to this, essentially $100 a day. Now, in the longer term, still somewhat medium, but it's not like my ultimate goal, is to get somewhere closer to $1,000 a day, which is about $365,000 a year. And I think that this is getting to the point where I don't think I would want for much more than that. Yes, I could, with more money, I could be able to purchase things like more ridiculous things, but at the same time, on a day-to-day basis, with respect to financial freedom and what have you, I think $1,000 a day is more than what I would ever be expecting. It's way more than I make at the current moment, and at this point, this is something where I'd be like okay and comfortable walking away from work, doing stuff that is more maybe philanthropic, or just dedicating myself more towards family and other things along those lines. And in order to be able to get that, I would need anywhere between $6 to $9-ish million, and that's pretty significant. I mean, I would have to continue to invest a decent amount of money, and obviously this is nowhere within the 5-year period unless something extremely drastic changes, whether I start a business or something along those lines. But at the very, very moment, this seems like a stretch goal in the next 10 years or so. This is something that may be happening late 40s, early 50s, even still if I'm lucky. But if you think about it, you want to have fun with this thing, showed you how to do it. Let's say you want to make, $1 million a year, just because, right? Just because you think it'll be fun. This is close to $1 million a year, right? So we have to expand this a little bit. But if you're looking in the 4 to 6% range, you're going to be aiming anywhere between $17 to $25 million, right? If you want to make $1 million a year, or about $85,000 a month, you're going to need a pretty big chunk of change. And of course, if you want, you can cut it down, right? I mean, if you have been looking over this 10 to 15% range or this 20% range, I mean, if you think about it, if you go from 1 to 2, you're going to cut your price in half. If you go to 2 to 4, you're going to cut if you go from 1 to 2, you're going to cut your capital in half. If you go to 2 to 4, you're going to cut your capital in half. If you go to 4 to 6, you're going to cut it by 50% again. You're going to need half the capital, right? So, you know what I mean. 33% less capital, rather. I mean, it all is all percentages, right? And it's not too difficult to calculate. But I think that a lot of times we get too hung up on a total, investment value number, and we never really think about, well, what is that portfolio potentially yielding that I could live off that forever? And another way you could look at this is maybe this isn't yield. Maybe if you don't care about dividend yield and you just want your portfolio to grow at, say, a certain percentage per year, and you still want to be able to sell a certain amount of stock, you can use this for that as well. But I look at it in terms of dividend income and what you might be able to do, and what capital you need to be able to achieve a certain amount of income. Because that's what I generally care about. I don't necessarily care about the total portfolio value like you see here. I think that this total portfolio value is a byproduct of what I want my income to be. So if you think about it, if I only want my income to be, let's say, $500 a day, which makes it a little bit more achievable. It's still more than I make now, for sure. But this is a little bit more achievable, right? If you're in the 4 to 6% range, you're looking at anywhere between $3 to $4 million. Is that a lot? $3 to $4.5 million is a lot of money. But it's a little bit more achievable. And to be honest with you, if you have this money coming in and you're only paying the 15% or so in capital gains, this is actually like making $225,000 in terms of W-2 income, right? Because think about it, if you're making W-2 income, you are essentially going to be paying in a higher tax bracket, whether that's 25, 30% of your taxes, or of that money that you make will go to taxes, whereas this is only taxed at 15% or so, maybe 20%. So you do get a tax benefit associated with these sort of investments and income rather than W-2 income. But hope this was very beneficial for you. A lot of people have been asking about it in the comments section down below. And so instead of continuing to write it in the comment section and only get it out to a couple of you, I think it'd be best to really put the math out there. And I think it's relatively simple. Getting to these capital values is a little bit more difficult for sure, but the math is simple. It's just how you apply that math for you to be able to understand where you need to be able to meet your income goals for yourself. So I hope that was helpful. And if you like this video, make sure to like and subscribe. I will talk to you guys in another video. But first, if you have any suggestions about other videos you'd like to see, make sure to write that down in the comment section down below. I always read them. I always try to respond. And if I don't get back to you, just write again. Be like, Matt Money, where are you at? Answer my comment. I left you a comment a week ago. Haven't got back to it. What's up with that? And I will be trying my best to answer. Generally speaking, I'd say I have about a 95% success and answer rate. But anyway, I'll see you guys for another video. Talk to you then.